And we are live. All right. So S&P, very bullish. We talked about the summertime rally multiple times. All right. So we're going to go over again what is driving this rally. What is driving this rally? What do we need to stay? What do we need to keep our eyes on for the rally to continue? We have a lot of macro to get to. So let's do the countdown. Let's go. Let's go, YouTube. All right. So hey, jump over to YouTube if you want to see the full charts, all the screens, and like and subscribe if you want to, right? Because we have all the charts coming down on YouTube. Where TikTok, I can't really show you the charts that I want to show you. The bullish macro charts, right? The charts that are moving the market, the business cycle. What is a business cycle, right? Technical analysis. You guys will be able to see technical analysis if you're on TikTok because I have it on here. You guys can see that. But it's going to be the other stuff, right? The macroeconomic cycle, the data moving the market. Right now, it's all about the macro, right? Technicals are a function. I'm sorry. Yeah, the technicals are a function of what's going on in macro. And that's what we're going to hit here. Technicals, macro, no fundamentals today, other than Robinhood acquiring, blah, blah, blah. We'll do a little bit. Anyways, yeah, let's get started. All right. So first take, we got S&P 500 broke out yesterday. Okay. What was this? Why did we break out so much? We're going to go over the why, right? The why. Why did we break out so far? Okay. We're going to go over that data. It was the ISM. Okay. The ISM Institute of Supply Chain Management. It was the report. It was a very bullish macro report. It showed that growth is still rising in the service sector and prices are falling. So that's a disinflationary boom. That's what we're looking at. That's why we had that big upside move. Also, we did get inflation for next week. We got next week inflation consensus, and the consensus is bullish. Therefore, the market's like, oh, okay, we're expecting better constructive inflation. We're going higher. That's sort of the thing that we're starting to see here. All right. So let me know if I'm going too quick here. If you got comments, throw it on. I know GME is exploding. I know. I see it. I see it. I see it. But let's take a look at everything here first. All right. So let's go to these markets. Look, I told you guys yesterday, oil is calm. Okay. That risk, that macro risk is off the table. Oil is calm. The 10-year treasury, this is the market rates. Okay. Making new lows, what was this low? This was May. So we're going, rates are falling all the way back to where they were in April. That's not that far, but hey, this is very constructive for markets. We talk about this all the time. If rates come down, markets go higher because interest rates are a very important factor for how stocks are priced. Okay, let me make sure this is working. I think we're working here. Let me know. So if interest rates come down, stocks go higher. Not all the time, but in this case, in this environment, in this macro environment, that is the truth. That's what we're looking at here. Okay. So rates are falling, making another low, and markets go higher. Now what we're waiting for is the dollar to roll over. Look at the dollar. It is struggling. Okay, struggling to keep up. Now the ECB did cut rates today. We're going to go over that. But this is bullish for the dollar. Or at least it's a price pressure higher for the dollar that the ECB cut rates because they're basically the dollar is more valuable versus the European currencies, but the dollar didn't even flinch. If anything, the dollar is still lower today, right? Now, this dollar rollover, keep in mind, is a bullish signal. This is a tailwind for markets. The dollar rolls over, risk assets in general go higher. Not necessarily Berkshire Hathaway, not necessarily value stocks, but risk stocks, risk assets, equities in general. And if you go up the risk curve, if you're looking at Tesla, Palantir, AMD, right? Maybe not Tesla. Tesla has its own thing going on, but AMD going higher, Robinhood going higher, Palantir going higher. That's what I'm looking at. And that's technology. There's other plays out there, but this is the bullish summertime rally that I keep talking about. Bullish summertime rally. We are in June and it is happening. And I don't see any reason why this slows down, right? You got the dollar rolling over. Okay. You got rates rolling over. And we just made a new low on rates also. You got oil pretty tame and it's summertime. So oil's not going higher because OPEC is easing, right? OPEC is, the market is selling off on OPEC. It's saying, hey, look, OPEC is done. They can't continue to cut and whatever. All right. So we got Doifer. What up, Doifer? Before we hit the EU rates, we're going to start with the EU rate cuts. European Central Bank cut rates. What does that mean? More liquidity for markets, more money supply into the global financial market. This, this is bullish for crypto. Yes, Nvidia is up a lot. Corporations borrow money. The interest rate means the cost of borrowing goes down. More revenues. Percent becomes profit. 100% profits go higher because you're not paying the interest that you were before. You're paying lower interest. Therefore, that extra interest goes to your profit, right? 100% Doifer. So very bullish summertime rally. All right, let's go ahead and start. Now, if you guys want to see these charts, TikTok, jump over to the YouTube. Link is in the description. Okay, Instagram, you guys will be able to see it. So we're going to jump over to the EU cut rates today. Very political, right? This is all about a political cycle too. It's not just financial. It's not just interest rate cycle. It's not just the credit cycle. It is the political cycle. There's more, right? There's more countries voting for a new election this year than ever in history. So this is a life-changing, this is a century, maybe not 100 years. Let's go a decade. This is a decade, once in a decade thing that you see. Once in a decade change that is happening. India just elected Modi. India stock market all-time highs. The market is pricing in Donald Trump winning. Okay. It's pricing in Bitcoin at 100K. And if Trump wins, Bitcoin 150K. That's what we're looking at. All right. Let's go and start with it. So ECB cuts interest rates for the first time since 2019. Actually, I'm going to keep this on this side. Let me see. You guys will be able to see it. There you go. You guys can see it now. I'm going to go through the news. Here we go. I'll let you guys see on TikTok. So ECB cuts rates for the first time since 2019, right? And check this out. This is all political. This is why I'm so bullish, because politicians need to print money to get your vote. Today, when they cut rates, this is the first day of voting for the EU Parliament. So the first day of voting, they decide to cut rates. What a coincidence. What a coincidence. I don't think so. I don't think so. So when we look at the global, when we look at the global central bank cutting cycle, it is still accelerating, right? So if they keep accelerating, what does that mean? More liquidity as you cut more interest rates. There's more money in the system, less pressure, higher asset prices globally, right? Why is that? Because, well, here in the US at least, US GDP is slowing, right? So we've slowed for 2 quarters in a row. And slower GDP is the reason, gives you an excuse, gives a reason to keep stimulating, to cut interest rates. Not necessarily today, but the expectation of interest rates being cut goes up when economies slow down. Okay? When economies slow down, the expectation for interest rate cuts or more liquidity goes up. And that's what we're looking at. M2, money supply. Now, this is a big macro picture going back to 1960 of money supply. It only goes up. But guess what? Over the last 2 years, money supply has been decelerating. As you can see up here, it's decelerating, right? But if we zoom in, let's zoom in. Okay, we zoom in. Money supply bottomed in October of 2023, and it's now starting to re-accelerate. Why is it re-accelerating? Well, probably because the economy is starting to soften and inflation is making more progress than we think. And I think this next week, we're going to have a really good upside surprise inflation report. That's my guess. More bullish for markets. S&P going higher. We will hit the technicals after this. I just want you to get the context. Let's get some context before. Yep, there you go, Danny. Jobs are softening, 100%. Jobs are softening. Growth is softening. Inflation is softening. More liquidity, more interest rate cuts. Not all at once, but it's coming. Okay. So money supply in the US, at least, M2, this is M2, going higher. This is on a year-over-year basis, which means it's the momentum, and they've been picking it up. They've been increasing that, and we're going higher. Now, what does that actually mean? Okay, when we talk about money supply going higher, let's throw on the charts here. We are talking about money supply, and I got this. I'm going to expand this out. Make sure we can see this on YouTube. Got to switch this back over here. No producers, just me. Okay. All right, let's make this a little bigger. So I want you guys to see what I'm trying to point out here with money supply. Money supply is the credit cycle. All right. This is the credit cycle reaccelerating, fueling asset prices. So first we have up here in white interest rates. Interest rates are falling. That is bullish for markets. Lower rates, more liquidity. If your credit card payments or your bank loans or your mortgage rates go down, you have more money in your pocket. So there's more money to go into the system, the financial system. What do people do when there's more money? They invest more. They're not stupid. They don't just put in their savings account. They don't go spend it. They invest more. Stocks go higher. I'm gonna hit your comments, Doifer and Veronica, in a second. Okay. Now let's let me hide the interest rates. Okay. Number two, on a year over year basis, this is the one I'm going to tug. Okay. On a year over year basis, this is money supply. Is it global? Yeah, this is global money supply, global credit. This is the global credit cycle. It bottomed October of 2022. That's when the market got bullish. Why is it so? Like, you guys got to pay attention to this, right? I know a lot of you guys do, but it's real easy. The market bottomed October 2022. NASDAQ, Bitcoin, crypto's a little different, but NASDAQ, S&P 500 all bottomed when global money supply bottomed. How interesting, right? How interesting is that? So money supply has been reaccelerating, and it did cool down for a while, but I think we're going to start reaccelerating. The European Central Bank cut rates, right? The EU cut rates. The US economy is softening. So they need to increase liquidity in the global financial system before there's a real estate collapse. And even if there is a real estate collapse, more liquidity. They have to. And it's probably not a collapse. I don't believe we're going to have this big collapse. I don't believe in that. I think there's just going to be some structural issues in the financial sector when it comes to regional banks. And what does the Fed do? More stimulus, right? More money supply. So that is the year-on-year money supply. And if we look at the overall money supply here, yes, it's trending lower, but it's going to start picking up. Powell's going to cut into galloping inflation. Galloping inflation, I don't know what you mean by that, Danny, but I don't think inflation is galloping higher. I think it's going lower. And we're gonna touch upon that also, right? So when you have, liquidity rising, and this is the expectation. Yes, the chart is bearish, but the expectation now that the economy is slowing is that liquidity picks up and that interest rates globally start to fall. And if they're falling and liquidity is going up and interest rates are coming down, this is a bullish macro setup. This is extremely bullish for markets. Okay. Back to the charts here. See if I could do that. Yeah, we're back to the market. What is this? Oil. Let's go back to S&P 500, and we're ready to break out all-time highs. Okay, S&P is going back to all-time highs. Yeah, it's bullish. All right, let me hit some of your comments before we move to the next topic. So Doifer says, move this over here so I can see what you're saying, Doifer, on the bigger screen. Corporations borrow. Oh yeah, I already read that. My bad. Interest rates go lower, markets go up. YouTube is like a VIP lounge. He sees your comments immediately. Yep, I see him. June 9. So June 9, the contract with Saudi Arabia ends. The one they have to sell in dollars. What do you think about this? Well, I would say if we're talking about oil, I think the US is going to do whatever they can, Veronica, to make sure there's more supply of oil. If they have to do a backdoor deal with Saudi Arabia, weapons deal, some type of financial economic deal, they're going to do it. They're going to do whatever they can because the US, their backs against the wall. The current administration, their backs against the wall with inflation. They will do what they can to make sure Saudi Arabia, OPEC, and it won't be, clean across the board. They're going to do whatever they can to make sure there's more supply of oil and not less. That's my theory on it. They'll do what they need to do because there's incentives to do it, right? You think it'll affect the dollar? I don't think so. I know a lot of people are saying, hey, if oil goes down, the dollar goes up. Not necessarily. That's not always the case. We can even look at those charts. I think that oil coming down is a sign of the economy decelerating, obviously, right? If there's going to be less production, less consumption in the next couple months, or it's slowing down at least, then there's going to be less oil output, right? So I think traders are selling down oil because demand should be peaking pretty soon, and they usually look ahead. So oil coming down is inverse to the dollar, but also you got to think, if the ECB is cutting rates, if the Fed is going to be cutting rates, if the expectation is more liquidity, more money printing, then the dollar goes lower because you're diluting the supply of dollars. So I think oil comes down and gets kind of sticky around 70, maybe 75, maybe even 80. But I think the dollar is headed lower, at least for the next 9 months going into the election, right? That's my view on that. Canada also cut rates. There you go. Canada also cut rates. Tigger Media. Is money supply and global liquidity the same thing? Uh, kind of not. It's kind of tricky. They never tell you exactly what it is. They just use terms. Finance is a lot of shadow stuff going on. But for the most part, global money supply is usually attached to a single country. So global money supply just tries to take into account all the top 5 countries' money supply, the top 5 economies' money supply. It tries to take that into account, right? Global liquidity, on the other hand, that takes into account money supply and I believe central bank activities or operations, like the reverse repo facility, right? The reverse repo has been draining, putting money into the system, which would be a part of Fed net liquidity, but isn't necessarily money supply, but it is, right? It's kind of tricky. So overall, if you take a step back, they're all the same. Tigger Media. There's probably small little differences, but they're all the same. They're all the same. They're all going higher. Disinflation is not galloping inflation. It is not. It is not. The petrodollar contract is ending. It was a 50-year contract. Generational change. Oh, okay. I see the petrodollar contract. Okay. Who knows? We'll see what happens. That'll be interesting. But I think either way, there's going to be incentives to make sure the global economy reaccelerates. That's my view. Are you concerned about the ISM new orders inventory, demand down, manufacturing down, economy down? All right, let's go over that. That's what we're going to go over next. All right, so business cycle indicators. Tigger Media, good point. Business cycle indicators. Let's hit up on that. Okay. I'm going to pull this up and we will get to technicals. TikTok, take it easy. We're going to hit the technicals, but I want to make sure we can also have some context to what's going on in the underneath the hood. Okay. First and foremost, oh, is your comment still on there? Yeah, let me take your comment off. Dang, this is tricky. Okay. So first and foremost, we have shelter is about 40% of inflation. And we're going to get to the ISM. Well, if we look at the last couple months, what we saw is there was a big jump in early 2024 for average medium homes, right? FHFA housing. There's a jump. And the next reading was pretty flat. So that means the next input to inflation for shelter is not going to be very big. It's almost going to be zero. It's almost zero inflation, right? You look at Case-Shiller, which looks at major metros, it actually went up by 0.4 by 0.1%. That's zero inflation. That's virtually zero inflation. All right. You look at the housing index, US housing index, it actually came down. So what does this mean? This means the shelter component to inflation is going to be more positive for inflation, more positive for markets going forward, right? Now, what does it have to do with the ISM? Well, if shelter's coming down, then inflation is going to be cooling in the shelter components. Now, when we jump over to the next part of inflation, it's going to be supply side inflation. Okay. So we're just really building on inflation. That's what these ISM reports tell us. They tell us growth and inflation. So for services in black, the service index expanded. Okay. It expanded. And it expanded, I believe, further than people expected. So that is growth. And the manufacturing sector contracted. So what is that? That is it's not a rolling recession, but it's not too hot, not too cold. Manufacturing is not too hot. And but guess what? We're not going into recession because services showed us they're still hot. People are still spending. The service supply chains are still growing. So that's a perfect scenario for the current environment. You don't want both accelerating yet because the market's going to say, oh, inflation's coming higher, right? You don't want both going higher. So if you get one up, one down, it's a perfect scenario. Not too hot, not too cold. All right. So, and you asked about the components. Let's go to the components of the ISM PMI manufacturing index. And I think we're going to dive deeper. So just, face value here, the plus sign is positive, which is employment was up. Okay. Employment was up. That's a positive because what it means is we're not really going into recession, or else the manufacturing sector wouldn't be adding jobs. They would not be adding jobs if it was a recession. They would be cutting jobs. So that's bullish, right? For the economy. Next one, ISM new orders, those were down. So at least in the short term, Tigger Media and everybody on here for the business cycle, it's at least in the short term, demand or broad ordering for manufacturing is down. So that's a cooling of the economy. That matches with GDP growth, which is cooling down. That's good. We're cooling down. And the reason I say it's good, because in the short term, we want a cooling economy. That's why the market keeps moving higher when there's weaker growth expectations, because it expects inflation to roll over. Now, ISM prices, this was the big win. This is why interest rates are making new lows, because prices for manufacturing actually decelerated also. That is disinflation on the manufacturing side. Very positive. All right. I think this is the services. This is the same thing. So this is the service side. We just talked about manufacturing. Manufacturing is basically in deflation. Growth is kind of stagnant because employment's up, but demand is down. So I would say that's a neutral for growth. Inflation is down. Prices paid are down. Very positive. Now the service side. Okay, so for services, we have ISM service business activity up. Activity is still, and that was a big move. We went from 50 to 60. That's a big expansion. Forward-looking growth, even though GDP is down, forward-looking service growth is still higher. Positive, right? ISM service employment up. So they're still hiring, even though they're in the contraction zone. So it's not too hot, but they're still hiring. ISM new orders up, and that was higher than expected. So growth is still reaccelerating in the services sector. Prices paid are down. You can't see it on here because I have that little thing on the bottom, but prices paid are down. And I have a chart that kind of shows it. Let's go to CPI. Is this prices? Here we go. These are prices. So this is the key factor here. This is why interest rates are coming down for the market. Okay. And what do I mean by that? Let's go back to interest rates. This is okay, we have S&P. We're going to switch over to 10-year rates. I want to take my time here. Look at interest rates making new lows. So for the last 5 days, 1, 2, 3, 4, 5. For the last 5 days and pretty much today, we've had decelerating interest rates making new lows, pumping markets higher, disinflationary. So the bond market is expecting lower growth and lower inflation. So back to the ISM. How do we know that, right? This is a macro lesson here. How do we know that? Well, if we look at the ISM index, prices paid for both manufacturing and services, we see that in black, and it's hard to see. I know it's hard to see a little bit, but just zoom in, just look a little closer. Red is your manufacturing. Okay, prices came down. So that's disinflationary, not deflation. That's disinflationary. That's what's so bullish for markets. In black is services. Well, guess what? Those also decelerated. That is bullish for markets because it says the expectation for prices in the supply chain are going down. So supply side inflation is improving. Okay, and these lead CPI. So you tell me if these are falling, where's CPI going? CPI should in the next couple months should be also decelerating. I think we're at a 3.3. Here's the June CPI expectation. We're looking at core neutral. We're looking at core inflation year over year. This is month over month. We're looking at the year over year dropping. Okay, still in disinflation. Yeah, is it slow? Sure, it's not dropping quick, but PC is a little faster, but it's still falling. That's still bullish for markets. And again, if this falls too quickly, it also means growth is kind of falling off. So a slow drip lower is a great setup. It keeps things pretty even, right? Month on month, if you put in energy and you put in food and energy, month on month is actually down. I think this is why markets bid up so much yesterday, other than a very bullish ISM business cycle report, is the inflation rate consensus is lower than expected, or lower than last month. I'm sorry, lower than last month. So we definitely need to hit it now, but hey, that's bullish, right? And then the inflation rate year on year is pretty much sticky. We're still looking pretty sticky. We're sticky to disinflationary, right? Sticky to disinflationary. So that's what we're looking at there. Um, ISM leads, we went over that. Now, new orders. If we look at services and manufacturing, we talked about this. You put them together. New orders for services are still expanding, so growth is not going into recession. Maybe housing, maybe a couple sectors. Manufacturing actually made a big dip lower. So what is that? Not too hot, not too cold. Growth is pretty stagnant. This is a good setup. Again, look, it's a good setup for the fiscal authorities to print more money. It's a good setup for them to spend into the economy. And guess what? The infrastructure bill is still online. It is still going to keep coming into the economy, right? And you also have the monetary policy interest rates. Now, is the Fed cutting? The Fed isn't set to cut by the market till September. That's the first rate cut the market is expecting. But either way, liquidity is starting to pick up. So that's good, right? Slower economy, or at least a sluggish economy, means more liquidity. Does the economy recover? No, but asset prices go higher because they love liquidity. That liquidity doesn't go straight into the economy from central banks. It goes into banks, and banks invest in assets. So assets go higher in general. In general, it's a little more complicated than that. Now, employment, here's another good one. Employment up. Now, we're probably going to get a soft report tomorrow. That's what I expect. A softer report, bullish for markets. If we're at consensus, bullish for markets. Now, remember the ISM, the reason we love the ISM, because it is a forward-looking business cycle indicator. It is what the supply chain managers are expecting for the next month. So it's forward-looking. This is our lead. And what they're saying is, hey, employment might be low today, but guess what? Going forward, we expect to be hiring. We're still hiring going forward. So not a recession, right? Just a cooling down of GDP, a cooling of the economy, right? Does that answer your question there for the business cycle? So yeah, I am not concerned about the ISM. New orders coming down. If anything, it's a bump in the road. And check this out, Tigger Media. Even if the ISM is down, well, guess what? If it goes down, CapEx for the S&P is up. This is NVIDIA. You guys already know NVIDIA is exploding. Why is NVIDIA exploding? Because there's so much capital expenditure, which is the bank accounts of the biggest companies in the world, the hyperscalers, Google, Amazon. You could say Apple, Google, Amazon. You could say Tesla, NVIDIA, Meta. Who else are we looking at? Microsoft. They're all spending tremendously on capital expenditures, or I'm sorry, on infrastructure for AI, right? Data centers, electricity costs, semiconductor components, integrated circuits. Who knows what else they're doing? So new orders will pick up because more manufacturing facilities are going up. More data centers will continue to grow. So I'm not worried about the new order sector. Now, where do new orders kind of hurt the economy? Maybe in a couple regions in the US, maybe in construction. I don't know. But I'm not worried about the ISM because Joe Biden will keep spending money. Joe Biden will increase more fiscal stimulus, more infrastructure spend, and we'll see those new orders pick up again, in my view, right? It's all about the business cycle here. Economy down. Yeah. And so basically we're seeing the economy down for maybe 2 months. Maybe June and July, like April was lagging indicators. So June, maybe April, or I'm sorry, May, June, July, the economy just cools. But I think we're going to start to reaccelerate in the economy maybe late July, early August. I have no clue. I can't predict it. I'm looking at the ISMs. Okay. So services is still expanding. Manufacturing is taking a break. Also, and I have this on here. Let's just take a look here. ISM. Here we go. So this is ISM. Let me see. Is this ISM new orders or prices paid? No, that's prices paid. Let's go to ISM new orders. Do I have new orders on here? Where's the new orders? No, I don't. I don't have it. No, that's prices paid. That's prices paid. All right, we'll just go back to the chart here. We'll just go back to this chart. Okay, orders growth, right? So again, the ISM in the red, the manufacturing side, that's what you're kind of worried about, right? The new orders coming down sharply. Well, the trend is still higher, right? Tigger Media, the trend is still up. So I still think we're in reacceleration mode when it comes to the ISM. I still think we're reaccelerating. So just keep that keep that in mind also. There's always going to be bumps, right? Nothing goes straight up. Nothing goes straight up, but the trend is definitely higher when it comes to manufacturing. Manufacturing activity in the economy is still rising. It doesn't go straight up though. It does not go straight up. Okay. So, okay, yeah, that's Nvidia. And yeah, the dollar is probably going to roll over here. All right, so we'll go ahead and go. What else we got here? We got European Union cuts rates, bullish for markets, bullish ISM, lower bond rates. We went over that. S&P support. We'll go over the S&P support next. But anyways, just to make it real clear, I know it's a trending, or I have that little bar at the bottom. When the European Union cuts rates, as they cut rates today, that is a signal that the rate cutting cycle has started. More liquidity from Europe into the financial system of Europe, and that's going to also reaccelerate the manufacturing cycle. Okay, and that's also a signal that other central banks will start cutting. They already started cutting. That's a signal that the Fed is somewhere behind Europe. China's already cut rates. Asia's already been cutting rates. So rate cuts are here. Rate cuts are only going to accelerate from here, especially as economies continue to slow. All right. And we should be seeing the dollar start to unwind also. Rates coming down. Okay. So where's the S&P? And then bullish ISM, because the business, I know I'm repeating myself, but there's new people jumping in, because the business cycle is, kind of slow in some parts and accelerating in others. That's bullish because prices are down. Prices paid are inflationary signals. Those are down. Disinflation, market goes higher. And I mean, it's in the price action also. Technically, we had the ISM come out it was yesterday. Yeah, ISM came out yesterday and prices paid were down, and we had a sell off in the early morning, and then a big run. What did we go? We went from 528 to 534. Okay, 1% jump. And you got to ask what made this jump. It's a twofold. Number one, CPI expectations came in lower. The consensus is that inflation disinflates on a month over month basis for core. Okay. And then number two, ISM services and manufacturing prices down. So that's why, because the market is expecting disinflation. Point blank, the market's expecting disinflation. And that's exactly why the bond market is selling off. And that's exactly why bonds are bidding up. Okay. TLT, if you want to look at it. And TLT pretty much broke out. They broke out of a range going higher. Okay. So I'm bullish. I'm very bullish for the S&P. I mean, if we do a little Fibonacci retracement, where could we possibly be? Let's pull the fib. To be conservative, we're looking at 5,400. I mean 54.2. And then to, somewhere between 54.2 to 5,500. I think this is Tom Lee's expectation also for the S&P. Something like that. Right? Something like that. What else do we have news today? We had Robinhood, and Robinhood's in a very bullish trend. Okay, Robinhood is trying to acquire Bitstamp, which is a crypto exchange. That means they want more coins. They're going to include more meme coins. Dang, this thing looks so bullish. More meme coins and more services for DeFi, right? And in the future, they're going to be expanding. So now Robinhood is going to be the one-stop shop. And this is why I like Robinhood. One of the ones, look at that trend though. Beautiful trend. One-stop shop for Robinhood, where you can get stocks and crypto, which you don't really have easy access to stocks and crypto anywhere else, right? You don't really have that. So I think Robinhood is going to do well, especially in the crypto cycle. It just made a new high. I mean, I wouldn't go chasing it here. Wait for a pullback. Wait for it to come back. But it does look good. UST sell-off will be weakening the dollar. Japan and China selling treasuries. Yep, Japan and China selling US Treasuries, and the Fed is going to be buying those right back. They're slowing down their purchases, and they're going to have. Actually, you have Danny. You have the U.S. Treasury Janet Yellen, right? Who is the Treasury Secretary? They're buying bonds back. So yes, China dumps, and guess what? I want the dollar to go lower. That makes that makes assets go higher. But the EU, I'm sorry, uh, the U.S. Treasury is buying back their own treasuries, and the Fed is also tapering. So they're going to be absorbing all the U.S. Treasuries that are coming off. I don't think it makes the dollar go up, but either way, it's a protection against the debt market, U.S. debt market. Okay, next we got Nvidia here. I'm sorry, Nvidia, AMD. AMD on trend. AMD is on trend here, right? Trending higher. Looks really good. Looks pretty good. Let's see. Breakout, breakout, breakout. I sold some more puts on which is a bullish strategy here for AMD because it continues to hold this level, and the market's at all-time highs. So you got market at all-time highs, and pretty much, and you have a theme which is semiconductor chips. Nvidia is taking all the market cap at the moment, but I think we do see a rotation into other chips. I like AMD's setup. I just like AMD setup. Okay, on a technical basis. So I'm looking out to July. I think July 26th or 29th. It's somewhere around earnings. I am selling puts, which means it's a bullish strategy. I think the 150 puts are 155 puts. So as long as AMD does not drop below 150, that's my strategy, right? Okay, go back to the comments. Tomorrow we have unemployment, non-farm. What up, Dimaj? I see you in there. Unemployment, non-farm, and average hourly earnings. Possible scenarios for tomorrow, results. Okay, good question. Good. That's good. You mentioned in the last live this Friday was important. Yes, this Friday is important. And you know what? I didn't believe the market would make a big move like it did today. I didn't think it would make this big move until Friday. So my intuition tells me, okay, we just ended. Dang it, I was going to sell some more puts. That's all right. So my intuition tells me that the fact that we made this big move early, I think the market knows the employment numbers are weak. And you see interest rates, right? 10-year yields also selling off. So if yields are coming down, the bond market is buying up bonds. And the reason why they buy bonds is fixed income or protection against a recession, or at least a recessionary environment, protection against slower growth, protection against inflation. It's not actually, bonds are not protection against inflation, but if inflation comes down, then bonds are going to be paying you interest. And as long as that interest is higher than the inflation, you're making money, right? So I think the market knows something. I think the market does know something. So what are some scenarios, some possible scenarios? Well, let's go to, on a technical basis, we could come back and test 531. I'm still pretty bullish. I think we can come test 531. And unemployment may come. We had jobless claims today, right? Yep. No sign of recession there either. Initial jobless claims flat, continuous jobless claims flat. Everything's pretty flat. I still don't see a recession coming. I know people are saying it. I do not see any sign of recession. It is a slowing, it is a cooling of the economy. It is not a recession. It is a cooling of the economy. Nothing just goes straight up. Perfect scenario. From where you see M2, please. Khalil Haka, go ahead and let me know if you're still there, Khalil, and then I'll show you. I just don't know if you're still there. Okay, hold on. Thoughts on going long. So anyways, non-farm payrolls. Let's take a look at the data for tomorrow. This is what we're looking at for tomorrow. All right. So we have, let me take this off. Okay, non-farm payrolls are expected to come out at 185K. Okay, 185K non-farm payrolls. What's the most important reading? I would say the payrolls because they're super random. I believe the last report we came in lower than expected. So this is really the trump card for tomorrow. I don't think we know. I don't think we could predict it. Unemployment 3.9. I think that stays about where it's at. I think that's exactly where we're at 3.9. I don't see anything different. Average hourly earnings. I think today we did have labor. Let me see. Today we had unit labor cost. I think they went up. So maybe that's just stagnant. There you go. At the very end, you can see they went up. So unit labor costs went up a little bit. Now, is that commodities or is that payrolls or is that, I'm sorry, wages? I don't know. I don't know if that's commodities or wages that made that go up. So I don't know. I think everything's flat. The real key here is going to be unemployment. I mean, you never know. These damn jobs reports have been crazy. They've been way off. Nobody can predict the jobs report. CPI is even easier, right? So keep an eye on non-farm payrolls. My expectation, Veronica, is if we come in consensus with most of the data, the market's at all-time highs tomorrow. If in a mild sense, if if non-farm payrolls miss expectations, unemployment goes to 4%, average hourly earnings are down, and labor participation is even, really it's these three, I think the market goes bananas because that's going to send rates lower. That's going to send rates even lower. Okay, I see what you're saying. A trend. Okay, you're worried about a trend. Well, let's look at the trend. Oh, it's kind of hard to see the trend on here. Let me see if I can, because it's so, let me see. I might be able to zoom in. Okay, this is non-farm payrolls. So look at this trend. Let me try to get it pretty good. Let's go to October. Let's go to 2023. Right? So TikTok, can you guys see it? There you go. So you see Veronica at the very left-hand side. We're still below the 2020. I'm sorry, still below. I'm saying this backwards. I was thinking about jobless claims. You can see that the trend is still up for payrolls. So I wouldn't be too worried about it. And what this really tells us is this is not showing up right. It should be down. There we go. Damn, this chart sucks. This chart really sucks. Trying to go like here, see if it does it this time. It's not getting it. Either way, Veronica, I wouldn't say the trend is too terrible, but think about it. Joe, the infrastructure bill is still adding jobs to the economy. Okay, whether they're migrants, what is it, illegals or legal, whatever you want to call them, doesn't matter. People crossing the border are still going to get jobs. So I think the payrolls are going to be fine. On top of that, all the CapEx spend from Google, from the hyperscalers, Google, Microsoft. I don't want to count NVIDIA. I think the data was Google, Microsoft, Meta, and Amazon, right? They spent $170 billion on capital expenditure, which is going to flow into the economy. They need data centers. They need more technicians. They need more engineers, right? They spent 170 billion halfway through the year. Last year, they spent 150 billion for the whole year. So I'm not concerned about payrolls really dropping off because it's a political cycle. They will not let jobs collapse, right? They're going to there's more government jobs than anything. So they're just going to keep hiring people. I'm not too worried about that. And then so that's it. It's unemployment and non-farm payrolls. My guess is it's bullish. I'm going to give it like a 70%, 75% chance the market explodes tomorrow if we come in consensus or we miss. The market is not worried about a recession right now. It is excited. If anything, the market kind of wants a recession. It's excited because the closer to recession, the closer to what? Who wants to guess? The closer to recession, the closer to what? Somebody tell me. What are we closer to? If we get closer to recession, closer to, more slowing of growth, what do we also get closer to? Somebody tell me in the comments. You guys know we've been talking about this for a while, which is why we've been calling the summertime rally. All right, Khalil. Well, what you're asking for, Khalil, is exactly what I'm saying. The closer to recession, the closer we get. And I'm going to throw it up here on the charts. There you go, Veronica. Cuts. Exactly. The closer to the recession, the closer to cuts. Closer to recession, the closer to cuts. So Khalil, you're saying, how can I see M2 in European zone? Thanks, man. I'll throw it up here. Yes, the closer to recession, the closer to cuts. And it doesn't mean the cuts are going to happen in July. It just means the expectation for cuts start to pull closer to today. And if that is the case, bond yields come down, rates come down, market rates come down, and the Fed might change their language towards, being more dovish. And for sure, they're going to increase, M2. So let's look at EU. Let's look at the Europe EU M2. I think you might be able to type it in here. Let me see. EU carbon. Let me just go to the European Union. This is tradingeconomics.com, Khalil. And let me see, calendar. Let's just go to the calendar and then go to the circle up here and then type in our check mark. Make sure I don't have a brain fart. EU area. There we go. EU. So let's click the EU. Let's save that. And you can just click the EU anywhere. Look at retail sales, blah, blah, blah. Marginal lending rate. So this is their margin. This is the EU cutting rates, by the way. I know it's kind of hard to see on TikTok because it's the view is not made for you. It's made for YouTube. But they cut interest rates by 25 basis points today. Okay. So there's your cut. There is your cut. So what you want to do is keep scrolling down. If you're looking for M2 for European Union, and I wonder if it's on here. I'm not sure. Here it is. Money supply for EU. Okay. Money supply for EU. Let's look at the long-term trend. What does that look like to you, Khalil? It looks like the European Union or the Euro area money supply is done going lower and it's now starting to pick up. So when they cut rates like they just did today, that is in direct correlation with more money supply, because essentially they're saying the cost to borrow is lower. So people, I don't want to say people, but businesses are going to borrow more money. Maybe the average person, they're going to, the credit card, whatever, it goes through the whole system. So they're on a path to cutting rates. That means liquidity or money supply automatically goes higher, right? So yeah, EU money supply up. Easy as that. Okay, let's go back to charts. I want to do a couple technicals here. Unless you guys have more questions, that's fine. Okay, how can I see? Okay, we got that. AMC. Okay, we'll go over AMC and GameStop real quick. I know people are asking about that. Before we get there, let's throw on these SMA, see where we're at. Okay, so now it looks like the S&P is now above the, what do I have set here? Let me double check. I know I switched these up. 50-day. Let me make sure these are right. 12, 26, and 42. Okay, that's not the one I want to see then. Let's go to this one. All right. So yeah, S&P is now, and these are all my levels. I could probably take this level out. It looks like we're not coming down. I'll keep this one. No, I'll take that out. We'll just keep this. We'll keep 523. All right. So yellow is I believe yellow is the 50-day moving average. Yep. And the market is now above the 50 and let me double check. Oh, that's the 200. My bad. That's the 200. Oh, that's VWAP. Okay. So we're way above the 200. This is the 50-day. This has to be the 50-day. Am I tripping right now? Yellow is the 200. How is that? Oh, I changed the inputs again. Okay. So 50 and the 10. All right, there we go. So the 50-day moving average is going to be in green. That does not seem right. Something's up here. Make sure I get it right. I switch these up a lot to make sure. Yeah, I guess that's right. 50-day. We're that far ahead of the 50-day. Okay, we're bullish. We're pretty bullish then. We're way ahead of the 50-day moving average. The yellow is the 10-day weekly moving average. I use that for the weekly. And typically, once you get above that, you're in a bullish, you're pretty bullish. Momentum is up. So be careful being bearish here at these levels. Be careful. Momentum is very strong. And if we look at that RSI, my favorite indicator is RSI, not on the weekly. Let's see, daily RSI, we're looking pretty good. I want to look at the 4-hour really quick. I think we had a sharp move to the upside. There we go. So we're still kind of in this consolidation zone, and I think tomorrow is going to give us that next leg above, where we run up to somewhere between 540 and 550 for SPY. That's my guess. But yeah, nothing but momentum here. RSI is kind of peaked out. No, it's not peaked out because look how peaked it was back here. I don't think we're even peaked out yet. We're still trending higher on the RSI. We have a little more momentum, maybe 2 weeks of upside momentum after this report. And then going into the CPI, I think we're going to be bullish all the way to the CPI report. I might be wrong because now that the consensus is out, the market can now price in a pretty positive inflation report. That's my view. So, okay, let's go back to Tesla. Look at Tesla's all about the catalyst at this point. We're waiting for the pay package for Elon. The market wants to see Elon get 25% of the company so that he can start his AI, blah, blah, blah. I think that's it. The market needs Elon. He is not only the horse of the stock, but he's also the weakness. If there's no Elon, Tesla falls apart. So we're still wedging. Starting to look, kind of looks ugly. Don't get me wrong. It looks pretty ugly. But you're waiting for that pay package. There's nothing you could do about that. You're just waiting. You're just staying patient. Today we had a nice move. Nothing too crazy. Nothing too crazy. Okay. Now, I'm very bullish on Bitcoin as usual. I know Bitcoin, but look at this. Bitcoin is now starting to break out of this wedge pattern. Okay. And keep this in mind. The US stock market is, most of the investors are going to be from the US, right? So when the EU cuts rates and Canada cuts rates and China cuts rates and they increase liquidity and they increase their money supply, Bitcoin is a global asset. It's a global commodity. Now Bitcoin's going to receive more liquidity. That's what it runs off of. It's going to receive more liquidity. Just because there's more money in the system, Bitcoin goes higher. Yes, that is true. And we're in an election cycle. I say this all the time. Bitcoin is the most bullish. Let's go to the indicators here. Let's turn on FedNet liquidity. Okay. So, and I know some of you guys have already seen this. Let's go to the weekly chart. Okay. Look how identical liquidity is with Bitcoin. Liquidity goes up. This is Fed printing. This was an emergency increase in liquidity here. Either way, Bitcoin follows. Liquidity peaks, Bitcoin peaks, rolls over. Liquidity starts to bottom and starts to pick up, right? And we're looking for that new high in liquidity. I think as inflation rolls over, we're going to get that. And Bitcoin's ready to break out. So Bitcoin is directly related to liquidity. And it's a little quicker than liquidity. It actually, bids up faster than the liquidity indicator because Bitcoin trades 24/7. So it's going to move off the expectation of more liquidity, right? Now we're forming a bullish flag pattern, or we're breaking out of the bull flag. This is a bull flag. We're starting to break out of it. Let's go to the 4-hour chart. It's a lot cleaner, right? 4-hour chart. Here you go. You're breaking the flag pattern and we're starting to hold the breakout. And all it means is the probability that Bitcoin starts to really lift tomorrow could be the catalyst. That probability goes up significantly. Now let's go to election cycles. Some of you might be new here. US presidential election cycles. Okay. Bitcoin has its best moves on during this time in the green. What is the green? Green is, make sure I don't get this wrong. Green is the pre-election year. So pre-election years, okay, Bitcoin, damn it. Come on. Bitcoin goes higher. And the simple reason for this is, well, what happens in a pre-election year? The the politicians are basically fighting over your vote, and they want to print more money, and they spend more money. And so Bitcoin goes higher because they're spending more money into the economy. Now, the first year, they have to actually do more for the economy. So Bitcoin goes higher, right? Here's another green year. Bitcoin goes up. Second half, Bitcoin goes up. This is the fourth year of the president. This is the first year that he's in office. Okay. First year of the presidential cycle, first year. And then second year. This year sucked, though, because we had inflation rise 40-year high. So this cycle was stunted. It came up short. But in this case, we're only halfway through the election cycle for Bitcoin. We're only halfway through, okay? That fourth year of Joe Biden. Today is Joe Biden. We're only halfway through. We still have a second half, and we have another half. So we're early. I think we're barely in the third inning. Okay, let's say the fourth inning. If there's 9 innings in a baseball game, I think we're in like the fourth. We still have a long way to go for Bitcoin. Now Bitcoin's a commodity. Now Bitcoin's receiving institutional adoption. BlackRock, I mean, it's undeniable. BlackRock has Bitcoin. JP Morgan has Bitcoin. The big banks have Bitcoin. They have crypto. Now Trump's talking about Bitcoin. It's over. If you miss this cycle, you're going to miss a big opportunity. This is it. This is it. And this is really the last opportunity when it comes to Bitcoin. There's other altcoins, but those are much harder to choose. It's very possible Ethereum goes to 20,000 in this cycle. It's a possibility. I think if you want to say realistically, let's do some price targets. Let's use that Fibonacci for the short term. For the short term, ETH, I think by July makes new highs. And I think ETH runs to about 5,000 by July. Okay, maybe I'm wrong. July, August. I'm going to give it a little bit of room. Somewhere between 5,000 and 6,000 for July. But if we go to the end of the cycle, if you want to talk about the end of the cycle, we're talking 12,000 to 20,000. Okay. There's a lot of stuff in the background that is being used and implement. DTCC, look at Tigger Media, Veronica, whoever's on there, whoever likes crypto. DTCC is going to Congress and making the case for tokenized assets. They're making the case to Congress. Hey, look at BlackRock and Securitize. It's a company called Securitize. Okay. So BlackRock has been using Securitize to basically move the assets. Remember, BlackRock's the biggest asset manager in the world. They're moving their assets to the blockchain, not the public blockchains, their own private blockchain. Okay. So they want to tokenize their assets, and DTCC is tied to the Federal Reserve, and they're helping make the case to do this. Guess what technology they're using? Well, they're all participating with Chainlink. Okay. Swift is, DTCC is, they're all using Chainlink's infrastructure protocol to make sure the tokenization of all real world assets actually happens. That's why I'm so bullish on this asset, because nobody sees it. Nobody sees it coming. You guys do, because you hear me all the time. But I think Chainlink has a monster rally as these regulations come true, right? And then the most bullish thing is literally, not the election cycle, but the most bullish thing for Bitcoin is literally just mathematics, right? It's let's go to it. Bitcoin halvening, okay? Well, what happens on the Bitcoin halvening? After the halvening, give it about 2 months, boom, banana zone. And why is it called banana zone? Because it goes bananas, right? And an easier way to look at, I'm on the log chart. If we go to regular chart, you see the banana zone. Okay, you go to the regular chart. This is the halvening for Bitcoin, right? And then you get it. Well, this one took a lot more than 2 months. This took what? This was November 12th, though. I mean, 2012, my bad. This took like a year. But either way, boom, banana zone. And then second half of the year exploded. Banana zone, right? Next election cycle. Here we go. We get a cut, sells off. I mean, not election. I'm sorry, halvening event, which is supply and demand. That's the most fundamental concept in economics, is supply and demand, right? 2 months go by, boom, explodes banana zone. Here's your banana zone. Boom, 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 goes crazy, right? Goes absolutely crazy. Can't even catch up with the price. It's too high. And then we come back down, get the half. This is for the new people. I know a lot of you guys already know this. Uh, you get the halving, get a couple months go by, maybe more than what is this? This is June, July, summertime, and then boom, September, banana zone. Go bananas. So here we go. We are in the banana zone. What do I trade? I will trade S&P 500. I like to trade Tesla, Palantir, AMD. Right now I'm trading tech, S&P, and crypto. But crypto is more of a I do crypto's my biggest holding by far, and I do mostly macro trades because crypto has about 2.5 years of super upside, right? Parabolic upside. And on a daily basis or weekly basis, I'll trade S&P 500 and I'll swing trade Tesla, just so you know. I see you. Anyways, yeah, here we go. We got the halvening. We're starting to break out. We're starting to break out early also. This is a breakout. It's not clean yet. We need to make all-time highs, but we are stair-stepping the breakout. Bitcoin's getting there. You mark my words. If you guys are new in there, you guys are probably already believers, so I don't need to continue on. So Tigger Media, Link might be the real world asset tokenization play. Yes, it is. It is Tigger Media. It is. Mark my words. So what's going on, Tigger Media? Check this out. I'm gonna try to explain this. I'm gonna throw on Chainlink. This is why I'm so bullish on Chainlink. Say it all the time, right? Well, Chainlink has the most actual financial institutions using it. Okay, has the most financial institution use. Swift is partnering with Chainlink. Okay, ANZ Bank, which is a bank in Australia, is using Chainlink. They're partnering with Chainlink they're using the protocol called CCIP in order to connect all their blockchains together and create efficiencies. It's a bunch of nerdy stuff. The point is they have the partnerships with the biggest banks in the world. They have a partnership with Euroclear, who clears settlement transactions, anything traded globally in Europe. So they're using them, right? Now this is the recent most bullish news that we heard, which is DTCC, who literally came out with the white paper. Look, I got it right here. This is DTCC's white paper that they just wrote. Not white paper, I'm sorry. It's basically a report that they did. DTCC Smart NAV. This is net asset value. This is how institutions like mutual funds, 401ks, right? ETFs. This is how they track all the data. They use net asset value. DTCC processes all the ETF transactions, and what they're trying to do is process it using Smart NAV. Well, it's a pilot. It's something that they're using. They're bringing it to the blockchain. They're trying to create real world assets. You can see through the white paper, they talk about Chainlink over and over. Chainlink is a leading technology platform, blah, blah, blah. Price rate, blah, blah, blah. Chain agnostic means it can go to any chain, right? That's not happening with all the other cryptos. They cannot connect with any chain. They need an oracle, and their oracles suck. So Chainlink is the ultimate golden record, the infrastructure for the future, right? So anyways, DTCC is going to Congress and they're making the case that, hey, look, BlackRock has been using Securitize, which is a company that helps convert assets to the blockchain, helps tokenize them, right? And all these relationships are all connected to Chainlink. And you're not going to see another blockchain or crypto with that many partnerships. That's the point here. And it's really complicated stuff. I don't want to go on for years about it, but I just see the best opportunity in crypto outside of Bitcoin and Ethereum is Chainlink, not Solana. Solana doesn't have nearly, it's a hype coin, but it doesn't have nearly the potential, I think, in my view, than Chainlink does. Okay. What else we got here? Whatever's in play. Okay, like I already said that. Robinhood's breaking out again. Okay, nice. You bought more yesterday. Nice. Nice. What about Render? Nah. No. My brother's a computer engineer, and he goes through a lot of these coins, and he he helps with startups. He's a technical officer for a startup company. I don't want to say what it is. Either way, he evaluates these. I'm not the smart guy here. He is. I just do the technicals, the macro. He goes deep diving into these cryptos, and I'm telling you, most of them are trash. Most of them are going to zero. Most of them have not made new highs. Most of them will never make new highs because they don't have use cases. They don't actually have use cases in the economy or the financial system. They don't have a strong use case. Um, yeah, I think Solana has huge potential, but Solana's doing a lot. They're trying to do things really quick, really fast. And let's put it this way, Tigger Media, when it comes to connecting to the global financial system, like big banks, they don't want any mistakes, right? Solana I think Solana got hacked, if I'm not correct, or maybe it was their data center went down or something like that. Banks can't afford that. That's why you see, what was it, Berkshire Hathaway the other day in the stock market, the price feeds got all messed up. If you guys saw that, I think it was Berkshire Hathaway went to like $0 or something. So that is the exchange having mistakes. You might be quick, but the security and the mistakes are still there. This is why JP Morgan or BlackRock is trying to create a new exchange in Texas. They're trying to create a new trading exchange, and I'm telling you, this financial system is coming. The new financial system is coming, and the biggest business of all is the business of money. Bitcoin's already $1 trillion. Ethereum's 350 trillion, 400, I'm sorry, not trillion, billion, 400 billion. Chainlink is a whopping 10 billion. It is tiny, and it's actually connecting to all these financial institutions. No one else is doing that. No one else has the credibility. So I'm trying to help you guys out here. All right, I'm done. Let's go to XRP trash. XRP ain't doing nothing. Which ones are going to be good? What do I think about ICP? I mean, ICP's trying to do a lot. I used to be an investor, and I got out because a lot of it just can't be done. They would be going against Amazon AWS. They'd be going against Google and Microsoft Cloud, and they're not decentralized at all. And I mean, I don't think it's a bad thing to hold a little bit of ICP, but I wouldn't get big on it. I wouldn't be trying to get big on the internet computer. You never know. It takes one mistake for a crypto to crash 60%. And I'm not willing to take that bet. I want to take my bets on secure protocols and secure stuff. Did you hear about Robinhood? They purchased a decent sized crypto exchange. Yeah, they're in the works, or they just announced they're trying to purchase Bitwise. Is it called Bitwise? They're trying to purchase an exchange. So we talked about that earlier, which is why I'm pretty bullish on Robinhood. Palantir looks good. We talked about Palantir. Palantir's starting to work out really good. All that support, 1, 2, 3, held that support plenty of times. Now, boom, breakout. Now we're breaking out. I actually added to my position. Oh, no, I didn't. No, never mind. I didn't add to my position. I added earlier. So I like it. Let's see where we might go for Palantir. Let's do a little bit of Fibonacci to be conservative. If we're conservative, we're looking at $32 for Palantir. I don't know how soon, maybe end of July, maybe not till the end of the year. Palantir is hard to, it's hard to predict, but I will say it's going much higher. And then 39.40 possibly into next year. It really just depends. They probably are going to get an S&P inclusion in the next couple quarters. They're going to be included in the S&P. It's possible. They almost did before, but I don't remember what happened. So Bitstamp, there you go. Tigger Media, Bitstamp, Bitwise. I don't know what that is. Bitstamp. So, and then again, AMD. These are my top picks. I mean, I know people do new. They do like new. They always have you, check out this stock and this stock. But it's good to just find some good names that have a thesis behind them, a long-term thesis, and learn how to trade them. They all move differently. They have their own personality. So for now, I'm chasing these three: Robinhood, Palantir, AMD, and of course Tesla. Okay, but Tesla needs a catalyst. Needs a little more catalyst. All right, GME, GameStop. Ooh, GameStop's on fire. Roaring Kitty. How many of you guys gonna watch Roaring Kitty's stream? He's gonna be streaming tomorrow. They announced it on CNBC, which is insane. How can I find liquidity chart? Oh, my bad, bro. So there's a lot of liquidity charts. Go to TradingView and type in global net liquidity. Okay. Go to TradingView and you can add it as an indicator. Go to indicators up here. You probably can't see. Let me see. Try to pull it up. Go to indicators and then go to global. Just type in global net liquidity, and this will give you the top 5 central bank liquidity. Central bank's liquidity, right? It's not going to give you the whole world, but it's going to give you basically where all the money's at. And you can also look up Fed net liquidity if you want to look at US liquidity. It's going a little higher. Fed net liquidity, you can look that up also. So global net liquidity and then Fed net liquidity. For starters. Okay, that's just for starters. So GameStop's on fire. I'm not gonna lie, the price action was very beautiful today, and I was like, ooh, I want to chase it. But you don't want to chase this. This was your entry. If you wanted to get into GameStop, this was probably your entry right here. First of all, we had a level here at what, 32? 32 is the level. Oops. Resistance, resistance, resistance. Resistance goes into pre-market, gaps up. Well, I wasn't a big gap up, but actually it didn't gap up. It opened right where it closed. Okay. And then it got above, that level, which is very bullish. Now you want to go down to like the 3-minute time frame so you can see a little more details. This was your entry though. I marked it up earlier because I know everybody's going to talk about GameStop, right? So your entry got above that level, starts to hold. You could chase it here, right? You could have chased it here. You had some capitulation, but even better, you probably want to go to the 5-minute or 15-minute chart. It retested the level. So you got the break retest. That's an entry. Goes back up. That's another entry. Or you wait for this. You could call this a wedge pattern. It's pretty much a wedge. You could wait for this wedge to break out, retest the breakout, and then enter here. So those are the opportunities. By the time I saw it, it was already taken off. It was already like right here. So I'm not going to chase that. I'm not going to chase GameStop. Just not interested in losing money. You'd have to enter a lot sooner, and I'm just not focused on it. This thing's a monster. AMC, pretty much the same thing. Not as good of price action. Definitely not as good. And then if you go to this one, I'm watching this one. I have a couple shares here, and this is SPWR. And I'm not going to trade this. I'm just going to see what happens. It has a 95% short float. You guys heard me talk about it before. Okay, 95%. That's a setup for a very sharp squeeze. So if this gets above 380, I mean, it's definitely going to at least $5, I think. 95% short interest. And then FFIE, everybody wants to chase this. It might go higher, but I don't really know. I'd have to look into it. Faraday Future Intelligence Electric. I'm not sure what they do. If it is a short squeeze, then yes, this thing can squeeze higher again. I'm not chasing it though. I'm definitely not. That was a big short squeeze. It's crazy. So bullish on Bitcoin, Ethereum, Chainlink, Robinhood, Palantir, AMD. That's where I'm at. Same thing as always. Bullish macro though. We're looking at a very bullish macro picture. All right, so we have employment coming out tomorrow. And what I would say for you guys is, let's go to the calendar. Employment comes out at 8:30 Eastern time. Is it 8:30? I got my time. I'm in a different state, so I got my time zones mixed up. Oh no, it comes out 7:30 Eastern time. It comes out early. Okay. It comes out real early. So you'll see what the market does, but look for inline consensus or lower. That's bullish. If payrolls come out hotter than expected and unemployment drops, I still think that's kind of bullish because where we're at. But the market, you're probably going to see rates rise. So the key to the employment report tomorrow, because you're not going to get in. You're going to have 2 hours. The market's going to try to digest the report. Watch 10-year yields. This is your key. Watch to see if 10-year yields continue lower. Oops, you guys can't see it on TikTok. Watch to see if 10-year yields continue to drop. If they continue to drop, the summertime rally continues to heat up. If rates rise because the jobs report is a little stronger than expected, the market should correct maybe for S&P back to that 520, 530, what is it? 527, 528. We could somewhere there 531, who knows? We could be correcting down there. You're welcome. You do a lot of small caps, cryptos to make more money faster and buy BTC ETH Link. Okay, nice. Yeah, nice. I mean, if you're doing it, you're doing it. Good luck. I hope you don't lose any money. They're just tricky, man. You definitely got to stay up. So you're just adding back to the big three. Nice. Good job, Eli. Keep it up. So more liquidity is coming into the market, bullish macro. I think the inflation report in a week, next week, is going to be pretty good. We have two big reports tomorrow, employment, and then inflation next week. Until then, very bullish market. I mean, it's really hard to argue that we're going higher. It's really hard to argue that liquidity is coming in. The most bullish factor here isn't that the economy is slowing. I'm sorry. The most bullish factor here isn't necessarily earnings are good. Yeah, earnings are good, but it's the fact that if the economy is still slow for another month, the Fed is going to pull those rate cuts up because inflation will be lower. And if inflation is lower, forget it. We're going to have a very bullish market. I mean, it's an election cycle. So as long as inflation stays under control, then interest rates for the market come down. The dollar is going to roll over, and it's bullish from here. That's all I got for you guys today. Hopefully bring some context. And let me know if you have any questions going forward. Going once, going twice. No, I'm just kidding. Yeah, so bullish macro, summertime rally continues to heat up. I'll probably go over the employment report tomorrow. We'll see. I think so. I'll pop in and we'll go over if something's weird. But anyways, I think we're going higher. I think we're going back to make new all-time highs and get pretty vertical. All right. I'll catch you guys later. Stay tuned. Oh, don't forget to subscribe to the newsletter if you haven't already. Subscribe to the newsletter. It's free. And what else we got? Newsletter. Yeah, just subscribe to the newsletter. It's free. I'll put more charts on there for the macro and some stuff on the weekend. All right.